What's up, everybody? Welcome to the Using AI for Trading course. This is an intro to the way I use artificial intelligence, large language model, everything like that, and kind of a foundational, let's get it structured. Okay, first things first, of course, take a look at our disclosure. Not financial advice, no recommendation to buy or sell. All right, so who am I? If you don't know me already, my name's Chris Dover, at Christy Macro on the internet. I've been trading since 1999. I'm a self-taught full stack developer, but don't test me on how excellent I am at the job. uh, I've built things for since I can remember. My mom was a computer scientist, or whatever, computer science major, whatever the term is, and she was a programmer for a very long time. We always had computers at our house. We were always doing that sort of stuff. So it just kind of has been natural for me to just tinker in this space. No formal education outside of a lot of, like, I spent a little time at school, but I never like pursued the computer science degree. Um, like I said, everything is mostly um, self-taught, and that has allowed me to move quite fast and explore my curiosities. Uh, I learned software development before I started building trading algorithms. I worked at a startup a long time ago, and it was kind of figured out a lot of. So we were doing blockchain before blockchain was even a thing. Um, Certainly, it was before Bitcoin, and it certainly had nothing to do with money. What we were doing. I was also spent a lot of time in Iraq. I'm a former Marine, but in Iraq, I worked with Department of State, and I I had been trading for probably 5 years at that point in time. And when I get to Iraq, I decided, I'm going to trade again. I got time, I got money, because the time difference was so different. I had like evenings to do whatever I wanted and keep myself busy. I was get back into trading, and the rockets coming in, uh, bombing our camp was an issue that I was kind of worried about. If I have my laptop going, I'm in a trade, and all of a sudden my laptop blows up because the rocket comes in. That's not good for a number of reasons. But my idea was like, why don't I just build systems and put them on servers in next to the exchanges so that I can, even if rockets come in and blow up where I'm living, the trades can continue. I'm assuming that I get to a bunker and I'm safe at this time, by the way. So that's what I did. I kind of like took my knowledge of programming and my knowledge of markets and put them together and started building trade algorithms. I've also ran a hedge fund, portfolio manager at a fund. I was a prop trader, and I write quite a bit about markets. So you probably are signed up for the email list. If you're not, go sign up. I like to write about all these sort of things. And let's see, former Marine infantry. I was finally, the last irrelevant piece of information here was I was a protective agent for Department of State, protected the president of Haiti, Steven Spielberg, a bunch of U.S. foreign diplomats and U.S. and foreign diplomats, CEOs. I did a lot of security work too. Had the opportunity to use technology to get all that forward. I started a predictive risk analytics software company. Eventually sold that, and kind of it's all coming together right now. So let's get like right into it here. AI is absolutely here. There's no more question of, is AI, what's it going to look like? What's it going to do? There's very much a question in the future of what we think AI might do and all that. But right now, as of 2024, this is a chart of the different types of AI that are currently in existence. And you can see in 2020 specifically, but in 2022 is when everything changed. Now, in 2017, I was tinkering with AI, but I didn't know what I was doing. In 2006 and 7, I was tinkering with AI, and it looked nothing. If you would have asked me back then what how I thought I would be using AI in trading, I was very much focused on neural networks, in essence, teaching AIs how to think the way we think, but faster and to understand when the changes in so for example, our one train of thought that we had back then was like, okay, well, I don't know if CPI was a thing so much as it is right now back then, but we'll just say it. So CPI, the economic data, if it comes in hot, that's bad. Sometimes if it comes in hot, that's good, right? If you cut interest rates, that's bad. But sometimes if you cut interest rate, that's good. If a company has positive earnings, that's good. But sometimes positive earnings is bad, like all these different things. And so our thought was like, let's use AI to figure out when, to interpret all that information. So this long list of information comes in, the AI figures it out. And then the idea was that the AI would figure out outcomes. That's what we were thinking 15 years ago, maybe when I first started taking it. And by the way, every 10 years, it kind of went through its own little era in finance of how AI was going to be used. And we just kept trying different things. Well, in 2017, I would say that's when things really started to become real in the ability to use AI, like machine learning sort of models to, we were all still trying to predict like what's the best indicator, what's tomorrow's open close going to be, like those sort of things. But it turns out AI in the machine learning sense is better for other things. And I'll get into that a little bit further into here. But if you'd have asked me in 2020, 2017, 2005, anytime what I thought AI was going to be like when it became such a part of the world, I probably wouldn't have said large language models were going to be the thing. 2017, when I was tinkering with that stuff, Google came out with the transformer paper, which is basically what a GPT is. It's a transformer. And, even then when that stuff came out, I wouldn't have guessed that the large language model chats that we're currently dealing with would be the thing that really took off. In 2021, I believe I even had access to OpenAI's environment. They gave me access and I was tinkering with it. I couldn't get it to work or do it. Like I wasn't that interested. Like you could not have convinced me that using AI really was going to be all that useful to what I did in trading. In trading, it was all about, or still is, all about finding a statistical edge and then using risk management around that to exploit it. That's pretty much what I look at. And so I would not have figured that large language models would have been the thing. Of course, if you would have asked me back then if I thought art and music and any of that sort of stuff would be something that AI would be doing, and I would have said, there's no way, accounting and coding and law and, stuff that just requires work with machines and, finding answers and replacing them and just doing mechanical tasks, that would be the first to go. But yeah, drawing stuff, being creative, no way. And yeah, well, here we are. So that's kind of an interesting chart. The next one is kind of a reason why like right now. Why now? Why is it happening? So for the longest time, since like 1950 or so is when AI was, that was like the first um conference, I guess, or the first like the initiation of artificial intelligence as an idea, and a solution was expected. In fact, they got together for a conference, and it was like in the 1950s. I don't know exactly the date. Might have been 1950, where they came together and they were going to solve artificial intelligence over the course of that conference, week-long conference, weekend conference, or whatever it was, right? Kind of crazy. So they've been doing for 70 something years, they've been working on AI being at a place where it could actually be useful. Now, this chart shows, academia and, academia collaboration and industry and other, maybe government or something, usage of AI. And you can see up until about the early 2010s, it started in the 90s. There was a bit of a boom, and then it died again because that's when the internet really started to kick off and compute. Everybody suddenly had computers. But then it died again. And then it wasn't until like the mobile era and let's call it Web 2.0, Web 1.0, 2.0, 3.0 thing or whatever, where um, commerce was being done, where it was, think recommendation engines, if you're familiar with the term, where you go on Netflix and it recommends a video you might watch, or YouTube recommends videos you might watch. Uh, TikTok, Twitter, all those places recommend something that you might enjoy. And then the same is true for like Amazon, a recommendation of, based on your shopping past, you might like this, right? If you bought snow boots in November and you happen to be in, like, let's say like Montana or Canada or something like that, the recommendation engine would think to itself, or would be able to like come up with the idea of like, oh, they probably are, well, that's weird. They are probably interested in maybe warm socks, a coat, gloves, winter type of items. Oh, I noticed by their other buying history that they like sports, so maybe winter sports is their thing. So that's like a recommendation engine, and you can see that mid 2010s is when that really took off. Of course, that's when Netflix really started to come into play. Amazon really kicked up e-commerce. E-commerce generally really kicked up. So recommendation engines was kind of the first real deployment of AI, and then predictive text also in your phone. The ducking heck, man. The autocorrect features, the predicting the next word in what you're writing. That's also that was an AI. Um, Obviously, that you start realizing what that is now with LLMs because it's predicting the next word. So let's kind of go over what we're talking about here with all of this. Um, I I want to clarify a few things before we get going on all of this and terminology and things that we're discussing here. I'm gonna say AI because it's just simple. Okay, generative AI is actually what we're talking about. Large language models, um, GPTs, machine learning. There's all these other things around it, but I'm gonna be a simpleton, and I'm not gonna be pedantic so much to say that we need to use the exact words on all of it, because it is evolving and it becomes multimodal, and all of these are kind of like merging together. So, I could probably be pissing some people off by saying that in this way at the moment, but at the same time, a year from now, we might see how generative AI and other things are working together in a chain of thought, or multiple different ways. So AI, again, it's not an answer machine, but it can answer questions for you, but that's not really what it's used or what we're talking about using it for. Okay. This is what I like to think of when I'm working with this. It's a partner. It's an indefatigable, meaning you can't wear it out. You can't put it to sleep. It's a research and development department with unlimited funding, resources, and no HR department, or nothing to make it life. What I mean by that is, you don't pay it overtime. You don't, you can use it at any time as much as you want. You don't have to worry about like, oh, it has a family to go home to, and none of that is involved, right? No shade on HR. Also, it's the worst it will ever be right now. Where the way we're using it, it's going to be better tomorrow and the next day. And honestly, if you're just seeing this right now, who knows? We could have just dropped the greatest model the world has ever seen, which is every new model. And all this changes, and we'll update along with all of that. So an idea I want to kind of like overcome first is the difference between using artificial intelligence and a search engine. So AI LLMs, large language models, predict the next word in a string of words that tokens that give you the answer you are after, right? So it has soaked up all of the internet, put it into its training center, and it's studied and learned based on all the words ever created, written on the internet, audio on the video on the internet. Like everything is now part of these models to train them. Okay. So it has like a huge body of work to know how to deal with all of the new things that are out there. And so when it's guessing the next word, it's because it's read every single book ever written, watched every movie ever recorded, listened to every song and audiobook and everything ever. So its ability to predict the next word is really, really good. And then there's reinforcement in there. Like there's a whole bunch of things that make it so it does a really good job of it. Search is a 25-year-old technology, basically. Prior to Google, search was you basically went to a browser, opened it up, and it was just 1,000 or 100 links on a page, and then an input bar that you would type in your search request, like if you're asking for like what's for dinner, what's a good restaurant, or something like that. And then the results before Google, the results were paid. So I would pay to be the first result in your, good steakhouse in Newport Beach, California. I would pay to get that result. Right. So that's kind of how search was. Google comes along and says, there's a better way to do search. And the better way is that you provide the best answer, not just the highest paid answer, but the best answer. Now, the highest paid answer was an okay model because, if you were to pay for a bunch of people to come to your site based on that, and, it didn't work because your website sucked or you didn't deliver the right answer, well, you would stop paying for those ads because it would just be throwing money out, right? So it's kind of an okay way. But Google basically says, what else is linked to this site? How many other sites reference this site as the source of truth? And then so that was like the first thing they did. And then they go in and they say, okay, now every time that this thing gets served as a result to somebody searching for something, how many times does it get clicked? So now you have this like iterative environment where you ask the question, it gives you a bunch of answers. So search will give you links to the query. Assuming you can ask the question well with search, it will give you as close to the answer as it can. And, that. So, like, for example, if I was to ask ChatGPT, now, by the way, this is the 4.0 model of ChatGPT, you might get a completely different answer than this. If I ask the ChatGPT, can you define what intelligence is? This is me asking and hitting enter to see what ChatGPT believes the answer is that it's going to give me. If you did this right now on ChatGPT 4.0, you might get a completely different answer. That's important, okay? That's actually a feature of these language models, this AI. It's a feature, it's not a bug. So the result I'm going to get might be different than the result you get, might be the same. Who knows? And so this is the result. Intelligence is a complex, multifaceted concept, generally refers to the ability to learn from experience, adapt to new situations, solve problems, think critically, and use knowledge in meaningful ways. I would agree. This general intelligence is the idea that there is a single underlying factor that contributes to performance across the different cognitive tasks. This view is supported by IQ tests. The idea there is that you can recall things and think through things based on your knowledge of something, okay? And then there's multiple intelligence, various types. Like, you could, like, let's just put this into an example. Like, Mike Tyson is a freaking boxing genius, right? But you wouldn't so much, if you wanted to say, intelligence of, defining what it is, you wouldn't so much associate Mike Tyson to a mathematical genius or intelligent in math. He might be, I don't know, but that wouldn't be the thing that, like, if I was to say, like, what does he stand out at, that would be boxing, right? And so this is the ChatGPT's version of it. Now, if I did the same thing in Google, you get the, people also ask, so it's helping you ask the question a little bit better. Wikipedia answer. Now you go to discussions on Reddit. It seems like if I'm looking at like this isn't a search term that gets a lot of ad money. So I'm going to these sort of pages. But if I was to ask a question like fastest internet provider or best steak in Newport Beach, California, or something like that, I'm going to get a bunch of ads along with it. And there's like 5 sponsored links before you get to any of that. So the difference with AI is it's going to give different answers often. And it's not going to give you the exact answer every time. Whereas search, for the most part, is going to continue to give you a very similar answer. It's very much a database structure. So understand that AI, large language models with AI is adapting and evolving constantly. It's learning by everybody using it. It's also learning by new data coming in. It's learning by new techniques, more GPU, more technology coming online. A lot of different things are shaping AI, right? Whereas your database query, which is what search mostly should give you the exact answer every time. Okay. So this is an evolution on answering. Also, I want to make sure to understand that AI is not a black box. It's not magic that is going to, in the form that we're going to be using it here, it's not going to be a magic black box that you don't understand the workings, okay, to do the work for you. Now, the thing is, you could build that if you want. That is an option to do, by the way. I'm just saying that this is not a black, just like if you were you could build your own strategies or your own things and use encryption to hide the way things are being done and over time it becomes a black box to you because it's hard to remember like a 64-bit character or string character for each letter is just super complex math to try to figure out and remember what's happening. So you could create black boxes without AI and you can use it with AI. But again, it's your partner. We're going to use it to do research, to analyze, to build, to test, and deploy systems. So at this point in time, it's about 2 years since ChatGPT was launched. Again, I had it, say I really had it. I had access to it and I never did anything with it until I got that little chat window. So I'm not saying that have been studying this ahead of time for anybody else. I'm same as everybody else, basically. But for the past 2 years, I've spent about 4 to 6 hours a day using these LLMs or different AI tools almost exclusively. So once I got through that, like, okay, now I understand how to use them over that like frustration of like, build me a trading algorithm that earns 100% per month and only loses $1, or only has a 1% drawdown. Once I got through that, like, that's not how you use it sort of way. I mean, how many people say have used the ChatGPT or Claude or whatever and said, build me a trading strategy that, has a 100% win rate or, something, right? It's not that's not the way to use it. I've not been able to get it. But once I got through that whole area and I realized how to use it, then I started using it every day. And I realized that this is a superpower and I have to do this now because it's coming. And if I don't know how to use it, it's going to run right past me. Also, I have this opportunity to do this stuff right now. And hey, what's the future going to look like after this stuff? I don't know, but I got to be involved because if I don't, I'm going to have to play catch up. So that's why I got into it. Since then, I've worked with hedge funds, family offices. I've worked with companies that have treasuries that they want to invest with and run strategies, and high net worth individuals, as well as, of course, everybody in the trading lab and the Thunderdome. This is the same framework that I've used to build, I'm using currently, and I've built up over this period of time to do work for them. So I'm going to give you like some examples of what's possible. Now, for this example, I had to sign an NDA here. So I can't give you the specifics, but let me just show you what basically it's a multi-strategy hedge fund. And they were a global macro focused fund. But they were growing assets under management and so macro and event. So they had a little bit more stuff going on. And one of the things that they were dealing with was they crushed when macro, when big events happen, they really outperformed. They really did well. And, it was fantastic. But one of their big problems was when a nice quiet bull market that just perpetually pumps higher in equities, they had investors who were like, because when the equity market is really strong, everybody's a genius, right? When equities are, getting crushed, just angry dudes on Twitter are geniuses. So they would have some of their investors saying, I'm going to take a little bit of capital out and like manage my own equity portfolio, or it would be great if I just had to, if I could put all of my capital with you guys instead of just a macro event focused portion. Anyway, they were saying, ultimately they said, hey, we would like to build a strategy that would outperform the S&P 500, not just perform because they could just easily create an S&P 500 portfolio, but they didn't want to take the drawdowns. And then when they, when the performance was better, they wanted, or in essence, they just wanted to outperform the S&P 500. They wanted it. So these were kind of the parameters that we had to deal with. They wanted it to be able to handle over $100 million in assets. So ultimately, it was kind of like a not really limited to capacity sort of scenario, but they weren't saying like this is the $100 billion thing. It was just like you got to be able to do over 100 million. Has the ability to do volatility targeting, which in essence, a lot of investors, it's basically what they do now is like, look, I want to invest this strategy at a 3 vol or a 10 vol or something like that because it's part of a bigger portfolio. And as long as their volatility is dialed in, then it should work out. Don't want to get too far into that. It's a subject we can discuss later on, maybe. They were looking for a sharp over 2. My guess is that is certainly marketable. And then they wanted to use Quant Connect, which is cool because I like Quant Connect. Quant Connect is a cloud-based quant trading platform. If you're familiar with things like Amazon Web Services, Google Cloud, Azure, basically you sign up with a credit card and they give you a server or servers or databases or whatever you need to build your technical product, right? You could host your apps, you could do deep research, mine Bitcoin, all sorts of things in the cloud. And so Quant Connect is that. It's just for quant trading. So you can get these libraries that are already organized for you. So you don't have to go and create special databases. They've already done that. You don't have to go call up different data providers and sign up with all the different data providers with, if I wanted to get like live NYSE, NASDAQ, CME, ICE, ARC, ARCA, and then news, and then data. That might be one data provider, and then I want to get like congressional portfolio monitoring data. That's another data provider. Let's say I wanted to get like unusual option surveillance data. That's another, like there's all these different providers of different data, news streams, social media sentiment data, like all these different places that you can like go and sign up for data feeds and like try to bring them in, or you just click and it just gives you the data, and you pay a monthly fee. So that's what Quant Connect does. So I love them. I don't need to host my own servers, and I don't need to do all that. There's some limitations with Quant Connect too. So it was not like a free for all. But given this data, I knew that I could build a system even without using an LLM that would be able to handle $100 million, could volatility target, would probably have it over a sharp 2, and could do it on Quant Connect. But I also knew that if you were to hire me and I had a staff of 10 people, developers, data scientists, analysts, researchers, all of the different type of people that would end up in your space, if you were hiring, like a project manager, all of that. If you were to hire me to do it and I said, I'm going to do this all on my own, even though I had access to all of them, that's kind of dumb, right? I don't know if that analogy, there's a glitch in my recording, so I don't know if it fully went through, but so I use ChatGPT, Claude, multiple LLMs, multiple platforms and data feeds. I mean, to come up with a solution, but I had to make sure that it was something that I could give them in Quant Connect, and they could connect their prime broker account to a brokerage account to it and take over the trading. So all that. And so I used the LLMs, and this is the result. Now I'm not going to show you an equity curve because it's fine. But I'm going to show you the results that we got. So Sharpe ratio 3.36 currently. It has a compounding annual return of 135% with a 17% drawdown. So that's roughly 5 to 1. So for every dollar of drawdown, there's $5 in profit to be made. This is I believe, a 2-year window, previous 2 years. So again, that's so 100,000 is now $355,000 or 255% profit. I believe that's 2 years. It could be even shorter. It could be 18 months. If you're familiar with Sortino, now we're looking at over a 5 Sortino. Win rates, okay, 57%. That's not really relevant. And looks like $250 million capacity, but that I don't believe that to be an actual really good number. And then, so this PSR up above, that's the probability of Sharpe ratio, of hitting that Sharpe ratio. It has a 99% probability of hitting that Sharpe. Okay, so in essence, what you're looking at is you're looking at a strategy that if you were to invest with them, you could make, assuming your volatility target, that's the adjustment, is adjusted to where it should be, you could make, like 200%. It's a pretty crazy strategy. Now, the thing about this strategy, that this is something that I would love to be trading in my own, but it has, so the fund actually has access to commissions that are ridiculously low, data set speeds and everything that allow this strategy to, with the high amount of transactions, and 626 trades. I guess that's not a huge amount, but you're definitely going to get a lot of tax and fees worked into that. So because they have agreements with their prime brokers, they can do things differently. So this one actually does use machine learning. And the idea is, if you know anything about how I trade, I want to identify the market regime we're in, which is the issue they had, right? They were great in these high volatility macro environments or big event environments. But when the market was just kind of quiet and trending and making money for your average person, they were kind of sitting idle. And so this strategy identifies different market states. The market state is volatility and direction using machine learning, and then identifies the appropriate strategies using machine learning for those different market regimes, market states. Okay, that's how so this is 2 levels of that. This is using an algorithm, machine learning algorithm, to do work, but I also built it using LLMs. So, like, this is what I'm looking to build. These are my constraints. These are the things that I'm working on. What sort of tools could we explore to work on that? And that's what we're going to cover in this course. So that's one example of what could be created, what we're going to have the ability to create these sort of things. I mean, you just think about this. If you had access to this algorithm, and you wanted to start a fund, you go out and you raise the money to start the fund, and this strategy would be your business. The thing is you want to have a portfolio of strategies to handle all the different environments. The next one I'm going to show you is the overnight anomaly. This is a strategy that we run in the trading lab. I'm going to show you it because this is, the last strategy was like big, high consulting fee, performance fee. This is like a hedge fund business type of solution. And I love building those. They're like, that's all I kind of want to do, because the challenges are a lot bigger, and you have a lot more resources, a lot of fun. But at the same time, this is built for an average trader to take advantage of. Okay. There is a, well, it's the overnight anomaly. Basically, the S&P 500 from the close to the open, the majority of its moves happen overnight and very little happen during the day. So that's an edge in the market that if you were to buy the market on close and sell on the open, you would make a couple 100% over the last 20 years or so. If you were to buy the open of the market and sell the close of the market, you would, I think, at best be up like something like 3% in the last 20 or 30 years. So a lot of the moves happen overnight. So this strategy goes long on the close, sells on the open in certain market regimes. Again, like we talked about with the machine learning stuff, this is not even machine learning, it's just statistics. And then it only happens on certain days. So in certain market regimes and certain days. And I'll show you, here's some of the research. You can see that if you were long since 1993, if you were long on the open, sold on the close, essentially you made nothing. If you were long on the close, sold on the open, so you're only in the market during the overnight sessions, that's over 1,000% return in 30 years. So there is edge here. And yes, you can absolutely see periods of underperformance. First, you see it in 2000, the global financial crisis, if you can see my mouse there. Global financial crisis, pumps up to, dot-com bubble into 9/11 or whatever, rally into global financial crisis, dip into global financial crisis, rallies into 2016 or so, 2016 commodity crisis, and then rallies into COVID, slams, and then we get to rallies into 2022. So the big point here is there is a lot of edge in this style. Okay, it's not the most edge in the world, but there is edge to be harvested here. Now, if you were to do this strategy, just buy on the close, sell on the open every single day, again, this would be a result if you didn't pay for commissions and there were no taxes involved and there was no slippage. So if you were, I think it comes out to about break even. So you have to then say, okay, for me, what that means is I've got an edge now. I go and I go work with the LLM and I say, okay, what are ways that we could, figure this out? And ultimately, with the LLM, we come up with a strategy. It helps me build the strategy of how to build and test a number of different ways to solve this. Ultimately, this is the last, I guess, 4 years. Because this would have been the COVID. Yeah, so it actually crushed in COVID, believe it or not, during the actual month of March is something like right in here. Just a huge amount of craziness. And then from, I believe this is 22 to 2023, it just didn't really do all that well. So this is where the regime filtering comes in, and I'm going to show you. This is just looking at the price action. If this rule and that rule and that rule, this rule and that rule happen, we go long. If not, no trade. So it's a pretty good strategy, it's 100% return with, I believe, if I'm looking at it correctly, like about a 10% drawdown. So you make 100%, it's like a 10% drawdown for 100% return, even through a bear market. So it's pretty good. So what we see here is the returns from 2020 to 2024. And on the left here is regime filtering. So no filter. So it just does the trade logic as is. On the right is it uses the regime filtering. So this is where I spend a lot of time with the AI, with the LLMs, figuring out how to use regime filtering. So you can see the difference. So $2,000 monthly average, if you just do it all the time, which means you're you are catching trades during bear markets. It just is a long stagnant period. Average percent return 1.4%. Average win rates 59%. Drawdowns 10%. It's a 24% annual compounded annual growth rate. Awesome strategy. 11 to 12 looks like 12 trades a month with a 1.27 Sharp and a 9.6 Sortino. Okay. So all we do now is we just added a regime filter. And so we don't trade during a certain bearish type of environment. So that more than doubles my monthly return from 2,000 to 4,600. The average return goes from 1.4 to almost 3%. Win rate goes up just a little bit, but your drawdown is cut in half. So you've doubled the amount of money, over doubled the amount of money you make, and your drawdown is half. And then it's a 50% higher compounded annual growth rate. Like it's an awesome system. The Sharp is at 2.56 and the Sortino ratio is at 3.55. So you can see that if we look at it on a monthly basis, this is sometime in the summer that I snapshotted this one in 2024. It's up about 18% so far in 2024. 2023 wasn't that good. 2022 wasn't that good. 2021 was okay. 2020 was incredible. And of course, this is risk adjusted here. So if I guess this would be a $50,000 account if $34,000 in profit was 20%, right? Is that right? Somewhere around a $50,000 account. Maybe it's $100,000 account because this is 47%. Anyway, yeah, pretty decent. So that's the purpose of that is to show you what we're going to be working on here. Okay. It's the sizzle reel, I guess. It's like these are the things that are available. These are the current systems that I've built and or improved through using the AI. So we're talking, this is 1, 2, 3, 4, 5, 6, 7, 11, 12, 13, 14. I know I'm running 15 strategies in production right now that have been built using this structure that we're going to go through. Okay. It's not a black box. It's not anything there is a real process. There's real code that you get and you look at and you can read. Now, again, I'm a coder, so I can read through and see what it does. But at the same time, you can absolutely, and I highly recommend, we will do this. You will have it explain line by line what every piece of code does. You will have it create, like I have them create like a pitch deck of every strategy. So that explains how everything works so that when I am running one, I know the reference. I know what I need to reference everything. So we've got the Swing Bee system was a system that I built manually, but I came back and I improved it using this. We have an equity trend momentum system, the overnight anomaly system we talked about, the machine learning long-only market state rotational, which is the one I showed you earlier, overnight insights. So there's key insight on overnight trading that means how I trade NASDAQ futures the following day, or the algorithm does. There's an equity earnings strategy. So if you have access to the equity earnings strategy, there's an earnings surprise. That system is no longer available. So I just stopped access to it because it's actually kind of a pain in the butt to maintain. Because there's a spreadsheet that needs to be updated constantly. And a lot of times people are just like breaking spreadsheets. It was just a pain in the butt. So I stopped access to it. If you're in the Thunderdome, you have access to it. But I've improved it so that it no longer gets on all the trades. It now starts finding the trades even better, the ones that are going to have the outcome we want, and then stays in them longer. So it's not not so much just trading the earnings. Now it's using that earnings event to kick off a new one. So that's stuff that we can like explore in this course. There's a weekly hold, which there was an old adage of like buy on Monday, sell on Friday. Just buy a call on Monday, sell it on Friday, from old floor traders. Well, that's kind of a system. So I went and studied it, and it actually works, believe it or not. But there's days of the week that it actually works better on. So think of, instead of buying on Monday, selling on Friday, think of like, I don't know, buying on Friday, selling on Monday, or buying on Wednesday, selling on Friday, buying on Thursday, selling on Monday. Like there's 25 versions of that, right? Then I have 4 intraday systems, an opening fade. So buying a dip, I call it a spike release, and then I call it a square. These are names that I came up with. So these are futures to short, or it should say short or long, shouldn't say short equity. Then I've got a couple of crypto systems. So what we're learning is mostly, well, it's agnostic to whatever markets you want to trade. Could be in options, could be futures, could be forex, could be crypto, could be stocks. You could do it in bonds, fixed income, venture, maybe, PE. We can build these sort of systems. So this is the culmination of about 2 years of 4 to 6 hours a day, most days, tinkering. So many systems are not on this list because for some, I may not be trading them right now, but they are part of the portfolio. So there's actually more. And, some of these systems are just not, they're not fully done, or they're just kind of sitting there, and they are the stepping stone to another system. I have piles and piles of strategies that have not made it to production, not because they're not good. It's just they're not as good as these. And there's something in there that maybe I need to figure out. But it's nice to have a code base and like a warehouse of all the data. So why use AI to build this? And that's what this whole video is all about, is to get you into the idea of how we're going to do it, what's possible, why we need to do it. Okay. At the very beginning, we know why. Like, it's happening. It's everywhere. You could, as we talked about with the search engine, if you said, hey, I would like a day trading strategy that's mean reversion in futures, you could go on Google and find a number of strategies for that. If I'd done my job right with search engine optimization and all those other things, you would be served the Curvy system, because that's a day trading futures strategy, mean reversion. But I didn't do my job very well on the search engine side, search engine optimization or anything like that, no ads or anything. So you may not ever see that in your search results. But the ones you buy may or may not be the ones that are going to work for you. So what you can do is you can build your own trading strategies based on what you need. Do you need to be flat at the end of the day? Do you need to only trade from 10 p.m. to 12 or 10 a.m. to 12 p.m.? Do you only trade gold? Are you able to hold overnight and through the weekends? Are you a pattern? Do you have a $25,000 pattern day trader account, and you trade on 4-to-1 margin intraday, but you have to be out, you have to cut your exposure into overnight, or you get margin called? Like, all these things. Are you at a prop firm? Like, what are the rules of the prop firm? Are you trading meme coins on Solana or whatever? Like, it's specifically to what you need. Okay. Yes, we can absolutely build meme coin trading bots if you want. So this is for you. Use AI to get exactly what you want, not what the AI wants, not what the Google search results are giving you. It's exactly what you want. You just keep working with it until you get it. You will know, you will have the ability to know all the details. You may not want to know all the details. That's up to you. You may just say, you know, well, I don't care. AI is making money for me. Let's go. That's cool. Sure. If you're good with that, I don't care. I like to know, but also at the same time, I honestly don't care. If that works for you. I'm sure I will run strategies that do that, but it doesn't have to be that. Okay. It doesn't have to be a black box. It can be a black box, but don't assume that it's just magic AI taking over your trading account and then you just like give it its username and password and say, you know, make me money, and then you come back and you hope it's live. um, and then it can be on whatever trading platform you want. If it has the ability to trade algorithmically or analyze things, like for example, we could do all of our work in TradingView, and then TradingView just informs us, and you manually enter your trades in, like, I don't know, interactive brokers or something like that. Or you could build it on interactive brokers. You could build it in Python and have it automatically trade on in interactive brokers for you, or in TradeStation Easy Language, or ThinkScript on Thinkorswim, or you know, however these things are accessed, you can do that. You just have to ask and have it show you how to do it. That's it. So this is like the last little piece of evidence. I put this poll out. Now, only 63 people of the 10,000 or so that follow me, 9,000, I don't know, follow me, actually answered. And hey, that's 63 more than I knew before. Also, if you look at like the most amount of people that interact with my content, they're mostly traders. It's just traders, whether we're talking quants, technical analyst type traders, or you know, whatever, earnings people, or angry perma bears, or moon boys in crypto, or whatever. I'm all of that, by the way, so not picking on anybody. I asked, how many profitable trading strategies are you running, that you are running live right now, have you built with LLMs? Some people took this to believe that they're using the LLM to trade for them. Oh no, I'm not. But have I built with LLMs? 14 of them. Zero. 84% of people, like almost all of them. So 6 people said they run more than they have. One person said that they have 1 to 5 strategies running live. So 7 people, basically, out of 63, 10%, no, 9, 7, I don't know. 1/9 of respondents are actually using it, which is crazy to me. Just crazy to think about, because that's all I do. And I've been paid very well by hedge funds and family offices and businesses to come in and like solve some of their issues, or you know, like deliver something for them in a world where these LLMs and all this stuff exists. And this is the tools I use to come in and do it. So hopefully this was a motivating video for you, illuminating video for you. Hopefully you got something out of this, and you can see that with all that just booming out there in the world, it hasn't really translated into us as traders doing things. Again, this is not a magic black box. We're going to do the work. We're going to build our systems. We're going to set them up. We're going to test them, and we're going to do all the things we need to do to make sure that they work. But you know, as far as everybody else out there, they're not doing it, man. They are not doing it. Or I get, you know, another answer is that of the 9-something thousand, almost 10,000 people that follow me on Twitter, and let's say a large portion of them are traders, they chose not to answer because they didn't want to reveal their hand. could very well be the case. I know that there's an edge that we have right now by taking advantage of it. I don't think that that edge is going to disappear because we take advantage of it. I think it's going to improve because we are taking advantage of it. And if we play this out, this is where it's all going to go anyway. It's eventually going to start morphing into these strategies that actually have real edge. And so if suddenly you have the majority of market participants using strategies with real edge, it's either the strategies with no edge may survive, or everything's going to go to these sort of things, and it will become clear because we'll all be trading with it. So anyway, that's pretty much all that right there. Have a wonderful time, and we'll talk to you in the next episode or module.